All right, hello everyone. Thank you for joining us for our webinar, Teaching Youth Financial Responsibility, part one of our Money Foundation series. My name is Kelly Schweppe and I'm the Program Marketing Specialist here at General Electric Credit Union. We're so glad you've joined us for this awesome topic and we have a lot of great content ahead. I'm excited to be able to continue to bring you insight right from the comfort of your home, work, or wherever you are today. And with that, I'm going to turn this over to Todd Moore with Trinity Debt Management to introduce himself and take us through today's topic.
Thank you so much, Kelly, and thank you to all who are on the call with us again this afternoon. Very much appreciated. Today's topic is near and dear to my heart because early on, I've been with Trinity Debt Management now for about 13, 14 years. One of my first challenges when I first landed my job at Trinity was youth financial education. And it's a topic that I've been very passionate about in my own work here at the office, having gone so far as to create youth financial education programs where I partnered with Cincinnati Public Schools and sat on boards and commissions and a whole range of other topics, really committed to this over the last 13 years. So certainly have learned a lot along the way and also continued to see the challenges of not only teaching strong youth financial education skills, but just being able to do good work in the community and work with others, such as General Electric Credit Union, who are committed to helping our kids learn and grow in this topic, but also provide good products to help families and parents really be able to do this work. So I'm really glad that you joined us today. So despite all that work, I wanted to start today by just looking at some of the data and research. This was compiled by the U.S. Financial Literacy and Education Commission, which was a federal body that wanted to really look at what are some of the drivers of financial well-being. What factors might create well-being? We know that youth may not have knowledge and skills. What's the current status of our education programs that we're using in youth financial education, or just what do people know? And one part of this study looked at adults. So before we get into looking at what kids actually know, just looking at kind of a lifespan and how we've been doing this work over 12, 13 years now, what do adults know about the topic? And here's kind of some of the things that we find. 1/3 of adults, could really not answer strong questions about financial education concepts such as mortgages, interest rates, inflation, risk, core economic kind of terms and analysis. And we know that not having a strong knowledge of financial education, it is a barrier to opportunity and economic mobility. And that was a big driver in my own work, was being able to see, kids and families really use financial knowledge and skills to maybe pull themselves from poverty, or just have expand the middle class, expand, economic mobility for folks in the Cincinnati community. So this has been a big part of the work that I've been involved in. But what we know is that adults still struggle with these topics, and it's really teaching ourselves and being part of seminars that are offered today that really improve those knowledge and skills. But we also know that financial literacy, a lack of financial literacy, can have a devastating impact on credit scores and how we make financial decisions. And that's one of the reasons why General Electric Credit Union has been so committed to, working with credit scores and really providing ongoing financial education through our seminars and our webinars, is to really change this one core finding here, is that we want to be able to make folks savvy in their decision making and certainly improve their credit capacity. Further in this study, I wanted to highlight some of this data, and I'll go through a few statistics, and again, just pointing out the need for why we need to continue in this work to really make our youth financially, to raise knowledge and skills and just make them savvy in this topic. 62% of adults have carried credit card debt in the last 12 months. We know we've been involved in a pandemic. We certainly know that families have been challenged in any number of ways, but this number is pretty consistent even despite the pandemic, is that families do carry a lot of credit card debt. And working at Trinity in this area, certainly see this all the time. 1 in 4, or 27%, admit they do not pay all their bills on time. 6 in 10, or 58%, find it difficult to minimize their obligations. Are they planning for emergencies? Only 19%. And then, we've also seen where it's difficult for folks to have the money that's needed if they have some type of reduction in income or financial hardship. And this is one of the reasons why recently if you did not attend one of the seminars or the webinars in the last couple of months, you may want to go back to the General Electric Credit Union site, because we did some work on rebuilding emergency savings. So we tackled a lot of those questions in that former webinar. So if looking at these statistics, if you need some additional work and thinking about planning for emergencies or additional savings, we'll kind of beat these numbers long term, go back and review some of those findings or some of the work that we did in the previous webinar. And then again, 16% say that their household carries credit card debt from month to month. This is, looking at an increase in the last few years. Certainly the pandemic has something to do with that, without question, but just relying on credit cards to kind of pull ourselves through, maybe as a form of supplemental income, just supplementing our overall budget when we're having a hard time. And then we also find that 56% of adults, struggling with a lack of savings or credit for home ownership. And certainly have seen this as a challenge in the last few years, but this is one of those core reasons why it's so incredibly important for us to focus on youth and make certain that as we go through this progression of the life cycle, that we're doing the core work that's necessary to build knowledge and skills so we can kind of beat these numbers long term. So I wanted to introduce you. We think about this topic again, thinking about how we can better teach youth financial responsibility, or how do we build financial responsibility in our kids and in our families. And one of the things I want to introduce you to here was I did a lot of kind of background work on this, and looking at University of Wisconsin Center for Financial Security. They did some really great studies and have done some really outstanding work at the university in a whole range of topics: youth financial education, retirement, and a whole range of other areas. But one of the research that they recently published was looking at this notion of financial socialization. And what they were basically trying to answer was this question. Essentially, it says, what factors empower some children to grow into financially capable adults while others may falter? So what happens along this process where we see some kids really become financially capable, who create financial well-being, and then we see others who maybe are not doing as well as they should? So part of their work focused on this area, this theoretical area of financial socialization. And many on the call may be well aware of this term socialization and what it means, but in this context with personal finance, it certainly has relevance as well. So it's a process of learning and advancing values, knowledge, norms, standards, attitudes, and behaviors that promote financial viability and individual well-being. And here what we're talking about is this notion of how we develop standards, norms, values, attitudes that will hinder or support the development of financial capability. So again, the research question was, what factors empower some children to grow into financial capable adults while others may falter? So what this study looked at was early childhood consumer experiences and why it's so important for families to really focus on exposing their kids early on to this topic and how that has a long-term implication for their financial well-being. So socialization begins in childhood and continues throughout one's lifetime. This is how we acquire those norms and values, attitudes. This is how we get those attitudes towards money and savings and debt, those sorts of things. Those experiences early on have a lasting impact. And it says here that the theory states that early childhood consumer experiences will have a significant impact on financial behavior. Now that's a core finding. What we do now sets the stage for longer term financial behavior. And then ultimately our goal is to create some sense of financial well-being. Okay, and that's defined as the ability to meet our current or ongoing financial obligations, feel secure in our financial future, and make wise financial decisions. So returning to, the study at University of Wisconsin, basically they kind of looked at three factors here with trying to figure out how we can better create financial responsibility in youth. And we look at what we call executive function, financial socialization, financial knowledge and experience. Okay, I'm going to walk us through a little bit more about what that means. So what they did was they looked at age bands. Okay, and want to return just for a minute, just to kind of think about this term executive function. If you have kids that are in school, certainly this concept of executive function has probably come up in some conversation, but this is creating cognitive processes. This is how we control behavior. That is, how do we select, how do we choose, how do we set goals? So many of our younger kids in their education right now, then you may hear about executive function. How do they organize their day? How are they starting to plan and make impulse control and planning, those sorts of things? That's the basic idea. But here's the researchers found that if you're looking at kids even as early as ages 3 to 5, that this is something that we have to develop. We as a family have to kind of develop in our children. So this is that building block or that formative time where we start to kind of embed in our children how they think about personal finances. And so what we're talking about here is, how folks will think about financial behavior. What choices do we make? And this will become much more clear as we look at the practical applications. But what I would like for you to think about this is just knowing that we have to give children responsibility. We have to be able to give them a goal or a task and then have them think through and really discern between, one way of thinking about it is wants and needs. We hear that a lot. But what we're doing is we're giving them the ability to develop executive function. That is, select among different choices what is more likely to produce some positive gain. And that's really what we mean is how do you think about, if given the opportunity, how will your child think about either spending money or saving money, or how will they delay gratification to get something else, what we might call a trade-off. Okay, but this is a core area. So even at that age, between 3 and 5 years old, researchers are saying, look, be aware that this is a formative stage and that those conversations that you're having at home or the tasks that you're having at home and just having that general conversation, this is part of that socialization process where our kids are absorbing this information and storing that away. And hopefully we're doing a good job as well as kind of asking our kids questions and developing executive function, having them choose among competing values. Next, the researchers looked at ages 6 through 12. And this is, again, where we start to look at, just building norms, values, attitudes. And we're kind of progressing as we go through. We're that age band at 5. Now we're going to go all the way up into 21. But you can see this whole process of socialization and at different ages, how we're acquiring different knowledge and skills, different choices that we make, our attitude, our values, our norms, part of that whole socialization process. So this is a formative stage as well between 6 and 12. And what we're trying to do here is we see this at school a lot, okay? We may have some youth financial education program. We may be doing certain things. That's part of that socialization process. Then we as caregivers or parents, those who are on the call that are taking care of their kids, grandparents, we all play a role in this socialization process. So what we're trying to do is develop values, okay? Develop values and norms so that we create long-term behavior, okay? Now, as one of the examples that I have here talks a lot about an allowance, and we'll have all sorts of debates about an allowance, but one of the things here is the researchers found that allowance does not change savings behavior. unless adults are really having some oversight as to how the money is spent, or we're challenging our kids to make some type of budgetary or trade-off decision. So while we're giving kids allowance, and we're thinking about, for many of this may challenge our assumptions. Many of you may say, well, Todd, already knew that anyway. But the research does support the finding that, allowance in itself, when we're thinking about long-term values, it's really not having an impact unless we as adults say, okay, you get a certain amount of money, but then how do you spend that money? What other choices could you have made with that money? What other items could you have purchased if you had only saved your money a little longer? Allow your funds to grow through time. Again, we're challenging our kids to try to develop a deeper sense of value and norms about money and money management through time. So this age, 6 through 12, very important as well. And, I think you'll see a lot of programs in the community that are focused on early banking and, personal finance. A lot of folks who are involved in this work, all plays out in that larger question of financial socialization. But again, it must also happen at home. Now, for families that are in this age group of 13 to 21, this is where we say that the researchers would say that this is the knowledge and experience phase. Okay, so here what we're trying to do is navigate financial choices, and this is the time when our kids are getting their first jobs. They get a credit card, they have a loan, and this is where we're really trying to use products and services, or reaching that age where we can use products and services, not just have conversations about money, but actually use products and services, and then develop, again, long-term financial decision making that will go into adulthood. So research suggests that using financial products and services, this is that knowledge and this is the practical application. This is going to have a lasting impact in terms of how kids will use money as adults. And experience promotes confidence in one's ability to manage personal finances and provides opportunities to challenge habits or assumptions about finances. So knowledge and skills. So if you have a kid who's in high school at this point, again, there are a lot of financial education programs that are out there in the community, really dealing with a whole range of topics, budgeting, banking, credit, whole series of financial topics. In Ohio, we do have a financial literacy mandate. Although schools will implement that mandate in very different ways. Hopefully your kids are getting some exposure out there in school on this topic. And then we, as parents, we certainly want to make sure that we're working with General Electric Credit Union to try to link with products and services. And I'll share some of those ideas with you soon. But again, the formative stage where, when we're looking at this age of 13 to 21, this is where you're using banking. Our role as parents is really to kind of challenge and make certain that we're giving our kids opportunities to practice these skills. But one of the things I found, working at a lot of the high schools around the area, is kids certainly, they get their first debit card, they'll have a lot of over limit fees and all sorts of things happen. And that's where we can play a role in the socialization process to really challenge them, make certain that they stay on track, make certain that they're not overspending, give them freedom, but also we want to challenge them so they build their knowledge and experience and how to use those products and services widely, particularly when it comes to banking services. So what did the University of Wisconsin's research really conclude? So what we want to try to do here is encourage and give access. Okay, so parents should encourage and give access to resources to make spending and savings decisions, and challenge children on how they reach their decisions. So going back to those formative examples, you think about maybe 6 to 12 and just thinking about that time frame. This is that time when, just having simple conversations with kids. I mean, anything from, you're at the store, someone wants to buy something, your child wants to purchase something, thinking about we want them to make decisions. We want to encourage them to make decisions. We're trying to build executive function. So we're trying to ask them, hey, delay gratification. So if you want, to purchase something, or you want a new pair of shoes, or whatever it might be, how do we delay gratification, maybe encourage savings, decision making, and just work with our kids to have conversations about money so that they get used to hearing financial terms, they get used to hearing and making decisions and being part of that process as well. That's really what we want to try to do: build executive function, and then build a financial vocabulary for our kids so that they're comfortable with hearing these terms, banking terms, financial terms. And that becomes the, as the University of Wisconsin would say, the building blocks for long-term financial well-being. Now, some of our kids that are maybe a little older, what we're trying to do is we would like to set some savings goals. So in this case, really what we're looking at here, again, trying to set some type of, even if it's coming from an allowance, if it's coming from small jobs that the kids have, or their own income, being able to work with them to create, you may want to work with General Electric Credit Union to open accounts. We might want to set a savings goal. We want to have a planning goal. We want to start thinking about having them think about budgeting. You've got X amount of money. How are you going to spend that money? Again, constantly having a conversation about money and savings. You may even want to, at this point, start thinking about, credit and how that functions. And again, having conversations, or even working with the credit union to be able to open accounts to get them to gain knowledge and experience. That's one of the key areas there, is engaging them in the process to practice their financial knowledge and skills. And that goes to number 3, where basically, using a bank account for the first time, opening up different type of accounts, putting money in, monitoring those accounts, being savvy with making financial decisions, making certain that they're not, spending their entire paycheck, those sorts of things. Here's where we want to really practice and develop strong personal finance skills. And then lastly is that we just need to be able to have constant repetition. And as researchers would say, through repeated practice, children and youth develop positive financial habits needed for adult financial well-being. So, that constant repetition of being able to practice. And that'll become clear here in a few moments when I show you some products and services that you can actually utilize, or some work that you can do with your kids through some of the resources that I share. Okay, just a second. My screen froze up. Okay, so this was a really great quote, some additional work that was done from the University of Michigan. And a very similar type of approach, where they were looking at, this notion of financial socialization, or just trying to find out, what actually creates long-term financial responsibility. So I want to read this quote to you. And this was done just, I think, within 2 years ago at the University of Michigan. So the professor there said, if parents wait until their children are teenagers to have serious discussions about money, they've already let a formative decade pass. Our work suggests that those important conversations need to start earlier than many parents expect. We can't yet provide much guidance on the content of those conversations, but we're currently investigating what elements of parent conversations about money influences children's feelings towards money. So this is that notion, that emotional, here what they were trying to look at in this study was that emotional connection between long-term spending behavior, okay? And that the professor there, Professor Scott Rick, what he was able to find was that children as young as 5 had already an emotional connection to spending and saving money. And, long term, you can see where this is going. So that's a lot of research and numbers and data to really get to some of the practical work that I wanted to share with you today. But just to recap some of this work, that formative area of socialization, that is very, very important. Those conversations that we have, the core work that we have with our kids and families, having those discussions, being able to open accounts, being able to have our kids practice and gain in knowledge and skills, that is the core foundation. And, for those that are on the call today, that's our challenge, is for us to take, that understanding of the research and understand why that part of the socialization process is important. That's how we embed that long-term decision making in our kids. So now I want to shift gears a little and to share with you some of the practical things that we can do. Picking up on that theoretical work, let's apply some of that understanding, particularly when we think about how we build knowledge and skills and decision making. What are some of the products and services that we can use in a practical sense to develop financially responsible youth? So one of the things I'm going to start with here is encouraging you to work with General Electric Credit Union to open a bank account. Okay, so this is, you can open, would be a custodial account, but you would open an account. And I want to highlight also, in the COVID crisis, we would like for you to schedule an appointment online or make an appointment from the website or the app to come in. Before you come in, just take a little time to set up an appointment, and then you can actually come in, you can open an account for your child. But very, very important, think about that first bank account. And I will share with you again some of the things that I've done on the youth financial education side. A lot of our kids will get their first bank account. We know that that's that formative period of time where knowledge and skills are practiced by using that account. So there's a lot that can happen with that account, good and bad. And I've actually seen a lot of kids at the high school level where they've gotten themselves into trouble. They have a job, they may be working at Kings Island or at McDonald's or something like that. And, they just overspent on the account. The next thing the account's in bad standing. They don't take care of the account. And then this is where they start to develop some really bad habits, but they also have their first kind of credit challenge long-term. So this is why it's so important for us as parents and families to be engaged in this process. Go back to that one core research finding. Great that we're having the tools to do the work, but we also play a role in that socialization process and that formative process to kind of challenge our kids to make good decisions, give them freedom, but also have some accountability for them. That's fundamentally our role, is make sure that we hold our kids accountable so that we can develop that longer term financial responsibility. So one way of doing this, open an account, and certainly there are a number of accounts that can be open, checking or saving, that can be open with the credit union. Also, challenge them to create a budget. We talk a lot about budgeting on our webinars, but with a bank account, they have access to their transaction history. Challenge them again, be engaged in this process. Constantly going to be challenging our kids as they go through this process to build knowledge and skills and provide that oversight. But what we're trying to do is have that conversation about trade-offs. Hey, you spent all your money on X. We need a longer term savings goal. Here's something I want you to do to prepare for college. Here's something that you're going to have to do to pay your insurance, or a challenge to pay, you're now responsible for some of your clothing expenses. I'm not going to no longer finance all of your entertainment or your extracurricular activities. What we're trying to do is get them to actually focus on the funds that they have, to have a few goals that they work towards, and then hold them accountable for doing the work. So they're working, yes, proud of them for doing that. But we also want to make sure that we challenge them with some type of financial goal so that they're constantly thinking about this topic and knowing that, hey, mom, dad, grandma, grandpa, we're not doing that anymore. You're now responsible for making those choices. And again, that builds the knowledge and skills, that practical application, part of the socialization process as well. It's building that knowledge and skills so that when they're out on their own, they have the knowledge and skills to be self-sufficient or to have strong financial well-being. So encourage them to put together a budget and then You may even want to encourage, part of that oversight that we talked about, or accountability. You may want to say, okay, here are 2 or 3 areas that you're now responsible for, that you will have to pay for using your own funds. That will require them to do some budgeting. That will require our kids to do the math. They won't be able to spend all their funds. They will have to have, they have some expenses that they have to meet. That's that formation that's needed for long-term financial well-being. Savings goal, we kind of talked about, in that last slide, but shifting somewhat, maybe what we want to do is early on, uh, even early on, maybe middle school age, is really start thinking about, the a first car that you're going to purchase. Again, trying to set up some type of savings goal. What we're looking to do is we really want to motivate our kids. This should be a positive experience for them. Banking should be a positive experience for them. Thinking about building credit and doing this work, we want them to be, we want them to have the mindset and to value this process where it's very positive for them. So what we're trying to do is encourage them something that truly motivates them. And for a lot of kids, a car is that's the next step towards adulthood, being out there on your own and having a car and have some freedom, have some responsibility. You can define it in many, many ways. But what we're trying to do is create, some type of savings goal where we can be consistent, whether at this point, whether they're working or not, if we're putting money in the account, maybe encourage them through work, if we're matching their savings in some way. Just watching our money grow through time. Think about what that means long term. When we think about, we see the number of people who, even as adults, don't fully contribute to a 401k. Maybe are not building long-term savings. Maybe have limited emergency savings at this time. All those sorts of things, all those things that we as adults oftentimes struggle with. Here, what we're trying to do is create some different behavior for our kids where they value that process. We created norms and values. Essentially, we're creating responsibility for our kids. Having some type of savings goal ensures that they develop the mindset or the rationale for why delaying gratification or making these choices, having trade-offs, why all that work is important. And you think about the practical application long term, here we have financially savvy kids that are also going to go into adulthood saying, investing, having a savings, an emergency fund, not being intimidated by financial services, those sorts of things, that puts our kids on a strong footing so that as adults, they continue along that life journey and building their personal finances, building knowledge and skills, and ultimately acquiring wealth. That's really what we want to do. So challenge them to create a savings goal. And for folks who may have been on some of my previous webinars, you know that I love credit and that I talk about it all the time. But here what we want to think about is really starting those conversations about what credit means. Again, some of our younger kids that are maybe not quite that, maybe think about middle school age, having that conversation again about what credit means, how it works, what minimum payments mean. You got to find a way to be kind of savvy in how you do that. They may say, hey, well, let's use our credit card to do this, or let's finance a trip. Or if they see you, and this is something that research certainly documents, and you'll find this in numerous studies, going back to that notion of socialization, whatever they see you doing is part of how they learn and grow and think about personal finances. So, if they see mom and dad using credit cards all the time, that develops that attitude that maybe credit cards used all the time is a good thing. Now, we certainly know that there's a right and wrong way to use credit. I'm not trying to have, pass judgment or a value judgment. It's just having that conversation about what it means, how we use credit, why it's used, being responsible with credit. And I can assure you those conversations where you're saying, use with caution, that creates that mindset that, hey, credit's not free. It's not free money. We have to pay this stuff back. So what we're trying to do here is, create a sense of credit, why it's important, what its long-term consequences can be if we accumulate a lot of debt, but also talk to them about the good stuff. Why credit's important, how it translates to home ownership, why it matters. And then ultimately, I would say if we can open an account where, you can use a secured credit line, which I'll talk about here in a few moments. You have to be 21, to open a credit card. So that would be, you'd have a credit, your children would have a card in their name. But, for our kids that are in that 18, 19-year-old age group, really what we're talking about is maybe using a secured card, where we would put a small balance, have a small balance, encourage them to use it, and just teach them, some really strong credit building strategies and why that card is important. That would be a great way to build longer term knowledge about credit, but also get them to practice and apply their knowledge and skills. So same goes for credit. Having conversations, giving them access, opening, using the credit union to open an account. And I would encourage you, to speak with the credit union more about a secured credit line. This could be a great way to teach your children about credit. Investments, earnings, and savings. Now, wow, these are three big areas of personal finance. I wanted to give you a couple areas where I found it's called the Econ Lowdown, and and it truly is a great site. I put this here because basically what this is able to do is this is a whole series of online videos where you can sit down and learn really investment fundamentals, and this goes from a whole range, all the way from kindergarten all the way through college. But I found these videos, frankly, I found these videos to be top notch. In fact, they'll have folks from the Federal Reserve, they have federal administrators, Securities Exchange. They have folks with some very big titles actually doing the videos who are practicing this work as economists and working at the Fed. I mean, it is really well done. So I would encourage you to check out the Economic Lowdown. Sit down with your child and really just go through here. And it's both in English and Spanish. It's a great site. But really what it does is it allows in small segments for you to learn something about just investment fundamentals, get our kids excited about money, get them talking about money, and then also, challenging them to learn some basic fundamental, terms and things like that, so that they're aware of what these terms mean, and hopefully that'll trigger longer term. Obviously, we want it to trigger longer term, financial well-being, but maybe it will even get them excited about learning more about the topic, and that's a key part. Developing our knowledge and skills is something that we all need to challenge ourselves with. But having our kids involved in this website, I think, would really do a lot for us to have that conversation about what investments are, how we can, practice good money management habits, but then also just learn some key terms and concepts about how investments actually work. So I'm going to encourage you to go to that Econ Lowdown site. Wonderful site. One that we all know well is actually earning money. So this is where our kids are working after school in their job or getting some kind of allowance that we give them, earned a lot. I should say we'll have them do some jobs and they get a certain amount of money for those jobs. But what we're trying to do here is this is earned income. So we will go back again, having them open an account, create a budget, have a savings account, and then also practice some strong banking skills so that they're managing that account. They're not overdrafting the account. They don't have a lot of fees attached to their account. We want them to earn money, put money into the account, and then make decisions with what they do with their money. And that's where the credit union really comes in as a partner, is being able to open that account and then get our kids involved in that process. Again, the long-term consequences is that we have kids that are able to understand about credit and banking, and that moves them into home ownership and a whole range of other financial concepts. Might also want to think about building emergency savings, having that kind of conversation. Again, whether it's emergency savings or creating some type of, I talked about, having a goal for a car or just having some savings, or, something that encourages our kids to actually have some savings. You can define what that is as a family. You can define what that is for what you're going to pay for and not pay for. But the goal would be to engage our kids in that process at an earlier age so that they begin understanding what emergency savings is about and how it functions to offset, a job loss or a car repair or unexpected medical bills, those sorts of unexpected challenges. So again, the credit union can play a very important part in setting up the account and then in helping encourage, longer term savings goals. Economic lowdown will certainly do a lot of work in this area, but it will also build a vocabulary around some of these key terms, opportunity cost. Now, this is something where you can have these conversations all the time, okay? And I certainly do have these conversations with my kids a lot, particularly my younger little guy. He is certainly into video games and he wants to buy things all the time. And what I've done here is I will get a card. We will load that card up with some money, and then I try to challenge him. What decisions I want to gauge him in the process. He's 8 years old, and this notion of opportunity costs. Again, kids weigh in on their decisions and they understand the possible outcomes. So he's really into Roblox, and he always tells me that I always say it incorrectly. It's Robux. That's what you buy. I don't like to spend money on these things, but occasionally we do. But the idea is that I will buy, a $20 card, and then I make him a part of that process. If you spend all your money, I'm not buying another card, for a couple months. You have to be very careful about how you're spending the money. So we have this ongoing conversation. And what I've noticed just from that little, spending shift is that, I used to buy him a card, he'd spend it all the first day. And then I wouldn't buy a card for a couple months. But, for our kids who are really into video games, they're very important to them. And what he's done is he shifted his financial behavior. So, pick what you want to be involved in. I mean, this can be everything from entertainment. This can be things that the kids want to purchase. Have a conversation about opportunity cost. Because what we're really trying to do is we're trying to change behavior. We're trying to correct what we call impulse purchases. And certainly as adults, well aware of how this happens, we make a number of choices and then we think, oh no, why did I spend all that money? It's an ongoing challenge, but the earlier we get our kids involved in this process, and again, the research makes it very clear, we want to get them involved in the outcomes. So, think about challenging them in some way to delay gratification. That's really what it's all about. We can go get ice cream today, we can go to the movies today, but then again, we're not going to be able to do X. Constantly have that conversation. Again, we play a role in that socialization process, and through that process, that's how we build long-term knowledge and skills, or that's how we create a strong process to make financially responsible kids. So that's where I would like to take us now, is into different resources that you can use to do all this work. Now that you've gotten some understanding of the theory, we understand, some of the products and services that can be used at the credit union to do this work. Also want to provide you some resources where you can really apply what we've talked about this afternoon. If you're not familiar with Practical Money Skills, what a wonderful site. Okay, this was done a few years back, but they've kept this site up, really now for it's been up about 5 years, and they just make it better every year. banking, budgeting, credit, money management, a whole series of topics that are involved there, and all for different age groups. So I encourage you to look at that site. Council for Economic Education. Here, what we're talking about is building, a vocabulary around economics. Many schools are not doing well teaching economics. Not a lot of schools are actually engaged in economics at this point. So many other things have come in and kind of replaced the concept. But this site is absolutely outstanding. I encourage you to go there. Economic Lowdown, which we talked about, cannot say enough good things about it. It's hosted through the Federal Reserve Bank of St. Louis. Wonderful site, and again, across all age groups. Khan Academy, they actually have great sites for kids and adults as well, but they're Better Money Habits, extremely well done, and I think that you'd enjoy it as a family. And then, there's several others here: FDIC, Securities Exchange Commission on investing. And then actually through the Consumer Financial Protection Bureau, they also have some really great stuff for kids and families as well. So lastly, what I would ask you to do is, again, think about how General Electric Credit Union can be a partner in this process. Whether you want to open a secured card, open up some type of bank account, all these things will translate into better money management, understanding how to use a debit card, understanding how to build credit. But I want to encourage you to reach out again and work with the credit union to open accounts, because that's where we actually get to practice the work. We know the theory, we know how to do this, but the practical application is really about using products and services well. And that's where the credit union really becomes a strong partner. And lastly, keep learning, and that goes for all of us, and starting with myself. So, I want to encourage you to continue following us through the webinar process at the credit union. We've got some great topics that are headed your way. Kelly will share those with you, but keep learning. Go back. I referenced the emergency savings and some of the work on credit. We have that archived on the website. And then obviously the session today will also be available for review as well. So thank you all very much for joining us today. And I hope that today was very useful for you and for your family. Kelly?
Thanks, Todd. So now we can go ahead and get into the Q&A portion. I have a couple questions that were pre-submitted through registration. If anybody on the call has a question that popped up, or if any of these questions make you think of something else, please use your questions feature in your control panel, and I'll make sure to get that asked. Starting off with the first question, are there any books that help teenagers understand the ways to save and invest money? Do you have any recommendations?
I tell you, books has been somewhat of a challenge for me. Off the top of my head, I can't refer to too many books, but I will say I would point you in the direction of some of the references that I gave you through the webinar today. Some of the books that I've seen, honestly I can't think of too many off the top of my head. Yeah, I've done so much work on some of the websites only because they provide kids not only the visual, but they also have most of the concepts built into the website. So whether you're looking at Khan, the Economic Lowdown, those sorts of things, either one of those would give you, I think, the equivalent of what any of the best books on the market that I've seen. I can't remember a lot of the titles. To be honest with you, some of the books that I've found have not been as strong. So that pushed me in a different direction. There's a lot of books out there that I will call popular reading that I haven't been that impressed with. And that kind of pushed me, I go a little bit more on the peer review side. So I tend to go towards some of the books that probably would fall outside that popular reading category. But any of the references that I've given you today, I think would give you some very good, strong footing in any of those topics. And then what I would also say is, you've got my reference number here, or my contact number here. Call me and I will do a little digging for you on that and work with you to find some good books that would fit, what you're looking for. But any of the references that I've given you today, I think would really support any of the work that you're aiming at. So yeah, just reach out to me and I'll help you find some books.
And as far as those references that Todd was mentioning, under handouts in your control panel, we have a PDF of those references that Todd went through a bit earlier. You're able to open that, download it, and keep it for future reference if you'd like to take a look at that. But the next question we have is, what would you say is the most important or one of the most important principles I should be teaching my child that I'm responsible for?
Yeah, I think one of the most responsible things you can do, I would say, is it depends on how young your child is. But again, having that conversation, I go back to that socialization. I found that very, very important. Allowing them to be part of the process, and then, having conversations with them at an early age about really what money means and why it's important. So if you're, I'm not sure how old your children are, but, if when you're out, just, you want to find some way to kind of have this in your conversation. So you're out and, your child wants to buy something, and you want to start that conversation by, asking them to make some type of trade-off. So you're saying, okay, well, we could go to the movies tonight, but I think we should do X. Or if they're older, working with the credit union to open an account is something that you should certainly think about doing. Anytime that we can engage our kids in some type of conversation about money, we're actively engage them through a product or service through the credit union. That's going to be, again, not knowing what the age group is. If you could help your child open an account, a bank account, start working with them to set a financial goal, and then really have some accountability about how they're spending money through, if they're working at McDonald's or just having some type of job, and you're working with them to challenge them in some way over a financial goal. Just that in itself starts that process of having conversations about money, thinking about delayed gratification, and then that starts to build knowledge and skills of products and services and banking. That's the foundation that's going to be needed to do the additional work for home ownership and investing and thinking about 401k and retirement and all those other sorts of things. So banking skills particularly are important. Other than that, just again, challenging our kids to make some type of trade-off, having those conversations early on so that we have them thinking about what it means to delay gratification towards a larger financial goal. I hope that helps.
Perfect. And then the last question we have is, do you have any suggestions as far as activities to help make saving and spending or understanding the saving and spending concept to make that more fun?
Yeah, that's a great question. I mean, savings and, saving generally for all of us, it can become somewhat of a challenge. Um, you know, Again, I'm a strong believer in just when we think about financial behavior, really underlying that is motivation. What motivates us to do something? So when we think about having fun around the topic, the way I would think about that is, what can you do to motivate your child towards a larger financial goal? So, and you can be really creative on this, okay? I mean, this might be a vacation. This might be something that you want to purchase. This might be something that you want to invest in. I mean, it can run the gamut of ideas. This might be a car. It can be all over the map. But here's one of the things. If you can really narrow it, and be strategic about how you do this, narrow it to something that you as a parent and your child are really motivated towards, you know, that motivation, that's key to personal finance, whether we're talking about youth financial education, or we're talking about, us being more engaged in our 401k or retirement or some type of financial plan down the road. When we think about making it fun, find what triggers motivation. Have that conversation with your family or your child about really what it is they're aiming. What are you guys aiming at together? What do you really want? And if you can tap into that in some way, what will happen is you're going to get excited about reaching that goal. So you start a savings goal, you watch that money grow through time, and then, as that money's growing through time, you might say, is this the right goal for us? Now that I've got, $600 in this account, am I ready to spend it all? Or would I just rather save this money towards a larger financial goal? So long story on this one, I would say find out what triggers motivation, set a financial goal, work with the credit union towards, opening that account so you can reach that goal, and then let that journey begin. There's a lot that can come out of that. But motivation is key. Motivation is key.
Awesome. Thank you, Todd, so much for your time today. That was our last question. So that does conclude our Q&A session. If you have a question that comes up in the future, Todd's contact information is up on the screen if you would like to reach out to him. And with that, thank you all for joining us today. Have a great rest of your day.